Hey, well, welcome back, everybody. I'm telling you, I'm just really looking forward to this next piece. We've got Lobo Tiggre on the line with us. And I talked to him midweek, and it turned out we just knew a whole bunch of people in common, starting at Doug Casey, who Lobo worked with for years, and Rick Rule, and a number of other guys in the mining business all those years. Lobo, nice to have you with us.
Very happy to be on the show.
Okay. When I look at your website, the Independent Speculator, if I'm saying it .com correctly, I see what you do is you invest in mining plays that you have really investigated for your own account, and you also have some subscribers to services that you offer. Now that's pretty broad sweep, but is that more or less correct?
Yeah, it's a funny question to start with, but just for clarity's sake, I'll say that there's a free letter, and we don't spam people who sign up for it. You get one email per week where I share my macro, and it's my marketing. That's my gentle form of marketing where people can see how I think and decide if they like it or not. As far as the services go, yeah, the main thing is a portfolio of my own investments. It's not just that I may own some of these and disclose the potential conflict of interest. That those are my investments. The idea is 100% skin in the game. And then we have this other thing called My Take, which is very different. As far as I know, there's nothing else like it out there. It's more like Consumer Reports. There is no portfolio. There are no recommendations. It's a service for everybody who wishes they could ask me to look at their portfolio and say, hey, what do you think of this? Happens to me all the time in conferences. I can't answer that, right? Legally, I can't answer that one-on-one, but I can publish my financial opinions in a newsletter. So that's what that does. There are almost 1,000 companies under review. Obviously, that's more than one guy with rocks on the brain can manage. So I have a team now that helps me with that. But all the ultimate judgment comes through between my two ears. So it really is my take. And so basically, it's for anybody who's looking for a second opinion, I guess, on any mining or mineral commodity related investment or speculation.
Okay, got it. So, and the other aspect is you go out and look at or otherwise investigate companies, and if you like what you see, you buy some of their shares.
Yeah, I've been doing this for more than 20 years, and I've talked to some of the greats, the people who have come before me, not just the speculators, my mentors, but the geologists, the guys
Yeah.
who go out there and discover multi-million ounce gold deposits repeatedly. And it was a striking commonality between basically all of them. They had different views on outcrop versus geophysics or whatever, but all of them really believed in the application of boot leather. You've got to go out there and hammer on the rocks. And since they're geologists, they lick them too, which is why the engineers pee on the rocks when the geologists aren't looking, but we don't need to go there. The point is you can't do this by theory. You can't just look at a satellite map. You've got to go out and look at the rocks and hammer on them and chip them and see what's there, and to get a better idea of where to explore, where to spend this very expensive, high risk exploration dollars, because you never know until you drill. So I've applied that in my own due diligence. I'm not a geologist. I don't go and make the discovery, but within the market, I'm basically doing the same thing, drilling down on companies, trying to see which ones have a real shot at delivering and which ones don't. And so, yeah, and now again, I have a team. They're brilliant, and in a way, I sort of unfortunate. I've trained them so well that now I don't need to go travel so much because there's other guys on my team that are closer than I am. It makes no sense for both of us to go, so I send them off when they're closer. And it's kind of a bummer because the kicking of the rocks is the most fun part of this business. But oh well, you know that's what comes when you start turning gray, I guess. Got to
Well,
let the young bucks get out there and help you out.
yeah, I used to talk to the brokers that worked with me about how we are all part of a team, really. Sometimes the guys may not think that, but the essence of a team seems to me to be to find guys that are better at doing something than you are, and have you do something that you're better at than they are, and the two of you work together and you make some headway. When I look at your website again, you mentioned there, I think you've been in 66 different countries. and a lot of them would be countries that people couldn't find on a map. It was, where the hell was that? So that was earlier in your career, and you're less likely to go those places now.
Well, no, I wouldn't say that. To go to that many places, obviously, it takes time to build that up. What I'm saying is just that now it's partially delegated, and that's recent. That's in the last couple of years where I've had to train these guys up, right? And now they're good enough that I trust them. They'll make a judgment. I don't need to check the facts. They may pick on my experience. And when I don't know something, I still go to Rick Rule and Doug Casey and ask, the same thing, get some confirmation. But it just makes sense to spread the workload. So the rock kicking is still happening, but I don't have to do it personally on myself. But the team still does it. And COVID made things difficult, go out and look at things. But the idea is still to go and proof the story on the ground whenever possible before speculating.
Okay, so there's any number of investigations you could do, and you're starting with, banging a hammer on the rocks for yourself and having a look at it. There's, you're going to look at the management of the team and what kind of experience, what kind of results they've had in the past. You're going to look at what country they're in. But let me maybe ask you this. Maybe recently, the last couple of things that you've looked at, how did you decide to actually go and bang the rocks on that property, or have one of your guys go do it? What sort of caught your eye and said, hey, we ought to look into this a little more?
I guess there's two things. Somewhat opportunistically, if we're in an area or if I have a guy nearby and it's an interesting story, wouldn't cost as much. And by the way, we pay for our own travel, or I pay for my guys and myself's travel. I didn't even let a company buy me lunch if I can avoid it.
Right.
Because I don't want there to ever be this perception that we're for sale, or for people to say, oh, well, if you gave them a thumbs up, how much did they pay you? No, we pay for our own travel, our own hotels, everything. I work only for my readers, not the companies.
Mm-hmm.
So, but sometimes there's something happening nearby. I'm going to a conference, and there's a tour nearby. I may jump on, even if I don't have very strong feelings about the company. But generally, the idea is we've done some preliminary due diligence, looked at the website, gone to the government filings and so on. And this is of interest. And I want to see it myself.
Mm-hmm.
So I will call them up and invite myself. And usually, since I'm a cheap date, they're happy to say yes. Or, honestly, it helps being a newsletter writer. They know that I have a megaphone for the market. And so it might be a little bit easier for me to get a yes out of a company on a mine tour than the average retail investor. But by the way, average retail investor, don't make that a reason not to ask. If you've got the time and you're willing to do extra due diligence, many companies, they'll have a tour, or they'll arrange something for somebody like me, and they're going to have a tour anyway. So they'll invite investors to come along. If there's, an extra seat in the Jeep or the helicopter, why waste the space?
Sure.
So it never hurts to ask, and it's always, always useful. And even if you come away, very unhappy with what you found, that's important information too, to know this is something I don't want to invest in, right? So the main criteria is, hey, I'm actually thinking about buying this stock, and I want to have a look first.
Right. Okay. So over the 20 or so years that you've been doing this, probably at one time, copper was top of mind. Another time it was uranium, it was gold, or I don't know, maybe you're even looking at coal. But what's is there one thing now that you're more interested in to look at than something else?
Sure. Well, my highest conviction trade for this year, going into the year, was and remains gold. And there's a lot that we can get into why. Probably a lot of the audience doesn't need to be persuaded of that. I think the quick summary will be, and I'll answer any questions you want on this, but the quick summary will be, I have been in Team Hard Landing. That has been somewhat of a lonely path over the last year plus. But now with the widening cracks, not just appearing cracks, but widening cracks in the U.S. labor market and other signs, unmistakable signs of recession, which somehow Janet Yellen doesn't see, but almost anybody else objective could see. I think that thesis is bearing out, and that is a very bullish thesis for gold. And going into that from a 2,500 base, that has the ability to deliver headlines here that will make the stocks really move with gusto. As you and I are recording, I don't know how long it will take to process this, but gold is up over $40 the last I saw on an intraday move. And yes, the stocks are responding, but they have underperformed recently. So I really like gold. I think gold, the metal, is likely to end this year substantially higher. And the stocks, many of them, good quality stocks, are still relatively on sale. And I see that as an opportunity. You asked for what's my highest, or you asked for a thing, but I have to say the uranium market, which was my highest conviction trade for last year and worked out really well. Uranium prices doubled in 2023. That had a big run. Now it's in a big correction mode, and there's a lot of negative sentiment in the market about uranium stocks in particular. The metal, it's doing okay, but the stocks have really sold off with gusto. And I think that also makes an opportunity. I would not have said the same thing a few months ago. The metal had rallied, the stocks had risen too. The horse had left the barn, as it were. But now the horse has wandered back to the barn, and I still see plenty of upside there. So I'm liking both yellow metals a lot this year. And sorry, one more thing, not to go on forever, but there's an interesting aspect to this two yellow metals approach in that it's sort of self-hedging. If I'm wrong about the recession and Team Biden has kissed the boo-boo and it's going to be, happy days from now on, maybe gold fizzles out from here. But that should be great for the economy. That should be great for uranium. The demand just keeps going. And so the other yellow metal will do better in my portfolio. If I'm right about the hard landing, uranium has actually been very recession resistant in the last 4 recessions. 3 of the 4, it actually went up. But the energy sector tends to get whacked in a market downturn and an economic downturn. So I could see more pressure on the uranium stocks in the little time we have left this year, whereas gold will do well. So one or the other should do well. And there's potential for both to do well, depending on how the dice roll.
Sure. And maybe always a good idea to not have, all your eggs in one basket and all that kind of thing. Uranium certainly had a great run. I mean, the flagship that I really pay attention to is Cameco. We saw the shares, I think, from the lows that they had in 2020 to the highs we had this year. It was about a 10x run, which, that is as hot
and that's no fly-by-night little junior. That's a large company.
Exactly. I remember actually, it was in the 1990s, Cameco became one of the clients of my friend Martin Murenbiel because they also had a gold mining business on the side from the uranium business that they were doing. Let's move along here a little bit. So your basic thesis then is the gold market is a bullish. You've got a bullish view on gold. There's different ways you can participate there. You can buy a gold ETF. You could buy a gold bar. You could buy shares in a gold mining company. You trade gold futures, options, and all that kind of thing. Your sort of chosen area is shares. When we talked midweek, I was making the point back in, let's say, the run up to 2011, the gold shares would accelerate faster than the price of gold because of the leverage that would go through. And since then, for one reason or another, it seems the shares have been lagging gold. And we had let's call it Newmont, I think, traded a low of $30 a share back in about May of this year. And that was one company. Maybe they'd made some questionable uses of their capital, whatever.
That never happens.
But come to how do you sort of along the range of companies that are got first stage exploration to somebody like Newmont in that arc, how do you pick kind of what's your sweet spot? Let's say that way.
I have a very precise answer for that, but let's tease some threads apart here because
sure,
you said a lot. And, if the thesis is bullish gold, it's very important to distinguish different ways of playing this, as you're saying. And the first and most important thing to say is that bullion itself, the metals itself, and by the way, silver correlates very highly with gold. So we shouldn't neglect the poor man's gold when we talk about gold. But the metals are one thing. The stocks are something completely different. In my view, gold is money. Like the original JP Morgan said, everything else is credit. Gold is money.
Mm-hmm.
So it's not a speculation. It's not even an investment. I don't buy gold because I think it's going up. I buy gold because it's gold. Governments can't print it, and come heck or high water, whatever happens, I can liquidate that gold in time of need. And that need could be an emergency, insurance, or it can be opportunity, right? Rainy day fund or opportunity fund. So that's how I see bullion. It's not a speculation. It's not an investment. Couldn't care less whether, the dollar gold exchange ratio goes up or down. It's something real that I can hold, and it's mine, and there's no short for my long, right? I control it completely. And so how much gold should I have? Well, it's kind of like asking me how much savings should I have, or how much money do I want? There really is no maximum amount of savings or money that I would like to have. So I always put some away whenever I have some extra money for long-term savings, and it is volatile. So it's obviously not something that I'm going to trade on a monthly or short-term basis or something like that. And then there's the paper substitutes, the ETFs and so on. If you're talking large amounts, if you don't want to pay for vaulting services and things like that, the better paper substitutes, they're a reasonable way to hold large amounts of gold with minimal expense. But they're still not, in my view, an investment. They're still just a convenient way to hold the metals themselves without having to build a vault or hire Brinks or whatever. Though arguably you're safer with Brinks. And then, you move down the spectrum and you've got the miners with the major producers being safer, and then the mid tiers, and then the juniors, and, crappy little exploration companies. That's a Doug Casey explanation or description of exploration companies. Sorry.
Mm-hmm.
So there's this whole spectrum now and that's, the stocks though, as a group, even though there's a spectrum, they're not savings. They're not money. Even your biggest, best gold miner in the world can have a major asset nationalized, and that can happen overnight, faster than you can sell. You cannot get on time. There can be material bad news in the supposedly safest gold stock in the world that will cause you a significant loss of capital if you're on the wrong end of that. So they are all speculations in my view. None of them count as investments. They're all speculations, even the supposedly safest ones. And that's completely different from owning bullion. Right? Bullion is savings. If I think the gold dollar exchange ratio is going up and I want to speculate on that, then I buy the stocks because they give me this leverage that you were just talking about, which has been recently absent. You said for whatever reasons. I have an answer to that. There's a free free article on our website called Are Gold Stocks Broken? You can use a little search tool and find that. It's a free thing. And I lay out my thesis. But basically, the gold miners deserve the disrespect that they have because they took a record gold run from 2001 to 2011 and managed to turn it into negative free cash flow. So, this time is different. We'll see. But so far this year, actually, the results that the companies are putting out are different. They are delivering. They are benefiting shareholders from increasing margins, which is what they're supposed to do in the actual business of mining. So still speculative, but this time looks better. And the opportunity is there because of that shadow of the past. The recency bias is that gold stocks are a crappy investment. I think that changes when you start looking at $3,000 gold, something like that. More and more headlines of all-time highs will really have people looking at, how do I bet on this? Okay, sweet spot answer is I personally approach this in a barbell way. And I'll have a few of the biggest and the best being, the relatively safe end of the barbell. And then I have some juniors, not even producers, but explorers and developers on the more volatile end of my barbell. And that's my approach. I'm not a big fan of the mid tiers. They're slow moving like the majors, but they don't have the volatile upside of the juniors, but they're more risky than the majors, right? They usually don't have as many assets. If something bad happens to one of their assets, it's a much bigger hit to a mid tier. So I like the barbell approach. Some money in the majors, just in a relatively safe way, and my speculative hockey stick money on the juniors.
Okay. Now, within that, there must be some some locations where you could invest in a mining company that are relatively safe. Nevada comes to mind, Canada comes to mind, Australia, and then there's some other locations where, as you say, the government might just take your property away. But if you had what looked like a really terrific resource in some questionable country, you could still put some capital there, but it would be not as much as if you had that same quality asset in Nevada, say.
Well, this is actually one of the lessons that Doug Casey taught me, and that is that at some point, price trumps risk. If it's cheap enough, then that compensates you for the additional risk. So, Africa is not one country. It's a continent full of very different countries. Some are much better, much more pro-mining, and relatively stable, actually, believe it or not, in terms of rule of law. They don't just change the rules every time there's a new president or whatever. But there are also more risky ones. So, depending on how risky it is, how prone it is to coup d'etats, or how voracious the people in charge are, prone to changing mining licensing, or suddenly deciding that the government is going to have a 20% carried interest in your project, or a 50% carried interest, that sort of thing. There are clearly places more prone to that in West Africa right now. You've got Mali and Burkina Faso that have just, it's a terrible shame, because the mineral resources are tremendous there, but the governments have been just much more dangerous, much more volatile. And they've actually so far been pretty good about not killing the goose that lays the golden eggs, or mines the golden eggs, as it were. But you never know. You never know. The next colonel who takes over could have a completely different view. Those white people, the O'Brunis, they call us. The O'Brunis are stealing our gold. Let's just take it, right? So, yeah, I just, it would take pennies on the dollar to get me to go to a place like that. And probably I wouldn't even go then. Somewhere more stable, but, makes me nervous. It might take me nickels and dimes on the dollar. Other places, even the best places, I'm still one. Believe it or not, this may sound like a contradiction in terms, but I'm a value speculator. I don't want a fully valued asset anywhere, even in Nevada or Ontario. I want a discount to, if not NAV, then, NPV, the net present value of a project, or what I might guess might be the value of a project that's still, in the discovery phase. I want a discount to value. I'm not paying 100% for anything, because, why pay for something that's fully valued? I'm looking for upside. So yes, my general view is I'm not looking to buy an AK-47 Central, right? There are parts of Latin America that have not just a reputation, but a track record of nationalization or changing the rules of the game, or even if legally you're not molested, you can't build a mine. There's protests every week. They block the roads. You can't get anything done. I tend to avoid places like that. It would take an extraordinary opportunity to interest me in something like that, and those are very rare. So generally, I'm willing to pay a little bit more to speculate in a safer jurisdiction, but I still want a discount.
In terms of jurisdiction, I believe China is the world's largest gold producer as a country, and Russia is the second. And I'm going to guess it's unlikely you would be trying to invest in a mining property in either of those countries.
Yeah, Russia is absolutely a definite no-go. China is not technically, like, when Trump was really stirring up the war, it became almost uninvestable. I would say it's close to, but not necessarily. The problem is, though, that 20 years ago, China really opened up to the West to encourage Western companies to come in and invest and even build mines and profit from those mines. But it was a classic thing, like when the Chinese invited the Japanese to come build them a bullet train, and they did. And then they said, "Oh, we can build you 5 more." And the Chinese said, "No, thanks, we got it." Right? It was just like that. The Chinese invited the nice Canadians to come in and build a gold mine in Inner Mongolia, where it's very cold, right? Northern China, mountainous region, very cold. So freezing temperature, heat bleaching technology, how does that work? So they let a Canadian company do that, and suddenly no more licenses available.
Hey, speaking of technology, I have to say this. I go to Joseph Schachter's annual petroleum conference or energy conference, let's say that, in Calgary. And I am always amazed at the technology that these companies use to locate, to find, to develop, to move, their product from in the ground. Has there been a technological revolution, in the mining business? You talk about going out and banging on rock with a hammer. Well, they've been doing that for 5,000 years. Is there a real technological growth in that business?
Growth, yes. Revolution, no. We're still waiting for that. I mean, even in my few years, only a couple decades in the business, I have seen material change. There's a technology called XRF, where you shoot a piece of mineral with high energy photons, and then you get instant information on grade and composition. And that could have been done in the field before, but it was a table mounted device. It was expensive and not everybody had it. It was fairly rare. Now they have handheld units. It's like a gun. You just walk up to a rock face, or you pick up a rock from the ground, you shoot it with the gun, and it'll tell you the mineral composition or the metallic composition.
Wow.
And so you don't have to send it off to a lab. So the difference of being able to look at something that looks interesting and know immediately what's in it, as opposed to saying, oh, we're going to send a sample off to the lab, we're going to wait 3 weeks or a couple months to get an assay back. That makes your exploration process much more efficient. Now, is it a revolution? I wouldn't call it. I mean, you still have to bang on the rocks. You still have to send assays off. They're not actually that accurate, and they're not very good for low concentrations. If you've got something that's a couple % copper or nickel or something, yeah, it'll give you that. If you've got something that's a 0.5 gram per ton gold, it's not going to give you that. So it's progress. I mean, it's really interesting to be able to do that. If I was a guy backpacking around, chipping on rocks, I mean, it would be a life changer for me.
Sure. Hey, what I was thinking of specifically, I think, was Robert Friedland had developed some. Okay, but I read in one of the newspapers about him developing almost, I'm going to call it an X-ray, but it's not that.
Yeah.
It was a way to look into the ground.
So it is not a way to look into the ground. The only technology that we have in mineral exploration that can be called imaging technology is seismic.
Mm-hmm.
With seismic, when if you have oil patch experience, you're literally sending these waves through the ground. They're reflecting off of structures or changes in density in the rock, and those reflections back. That is an image that you're creating based on that energy propagating and coming back. Sorry, you're tickling the physicist in me. But Friedland's invention is not new. It is a variety of induced polarization technology, IP, we call it.
Right.
I have heard him say you could read the license plate on a car a kilometer under the ground. I think I could safely say that is a Trump level exaggeration. Pardon me, Trump fans, but at least you'll understand my metaphor. Pardon me, Friedland fans. I'm not saying the guy hasn't made a lot of people a lot of money. I'm just saying, no, you can't read a license plate on a car a kilometer under the ground. I don't think you can even see the car. Now, can you see stuff a kilometer under the ground? Yes, you can. Do you know exactly what it's made of? No, you don't. IP, there's various kinds of it. And basically, you're shocking the earth, or you're running currents through it, and you're interpreting the results.
Right.
It's not an imaging technology. It's you're taking readings, and then you're generating a theory based on those readings. And so when you see these colorful geophysics maps, and this is, it's green and it gets orange, it gets red, oh, that red, that must be the hotspot, that must be the mother lode of copper. Well, no, there's actually several things that could produce that response. And not to go too technical on you here, I'll just tell you there's an old joke amongst the geologists that IP really stands for it's pyrite.
Okay.
So, right, it's not gold, it's not copper. Pyrite generates the same signal as a copper porphyry. So just be careful with getting too excited about geophysics. I mean, I'm not poo-pooing all geophysics. But the other joke geologists have is if you go to a geophysicist and you say, okay, go ahead and do your work, and the geophysicist will answer, well, where do you want the deposit to be? because it is subject to interpretation. You're interpreting these readings, right? So you always want your surface samples before you go to the geophysicist. And if he lights up hotspots that correspond with what you already know from your geochem and your rock hammering, well, then you have confidence that he's onto something. And I have seen that work. I have seen that work very well. Copper Mountain was a discovery, or the big discovery at depth was done that way, where the geophysicists were not told the geolocations of known mineralization, and they lit up like a Christmas tree exactly where they were supposed to. And there was a big honking signal beneath these 3 points, and they drilled it and they found it. So I'm not poo-pooing it, but I'm just saying, don't get too excited when the geophysics, brings you all these colorful maps. You never know until you drill it.
I think
and by the way, that's 100-plus-year-old technology too. The diamond drill, that has been going on for more than 100 years. And coming up with a more efficient way of sampling in the ground, actual sampling, would be a revolution. Something that's true imaging, like 3D seismic, but that actually tells you the metallic composition, that would be revolutionary. And something like diamond drilling, but it's faster and more efficient, would be another revolution. We could, there would be no shortage of minerals in the world if we could crack those two nuts.
Great. I'm going to shift gears just a little bit here before we wrap up. The time horizon that you have, we talk about there's guys that are day traders. They're not going to, it's going to be totally different than you. But let's say you get wind of something you want to have a look at. Either you go and bang on the rock with a hammer, you send one of your guys out there and looks interesting, and you keep involved, getting more investigating, and you put some money into it. But when do you think you're going to take profits on a play like that? How long are you into something?
Right. I'm absolutely not a day trader. I am a buy and hold sort of guy, but not buy and gold until gold goes to the moon or copper goes to gazillion, whatever. But it's the specific thesis that I'm speculating on the company.
Mm-hmm.
It's either they're making a discovery, they're building the mine, or they're producing and making money, and they have an expansion that's going to increase their production. So I'm always have the exit point in mind when I buy in the first place. Usually I want that to be within a year. Things often take longer. If it's a great, if it's a well-documented mine building project, for example, we call this the pre-production sweet spot. I have another free download on my website. If you want to look up we call it the PPSS, the pre-production sweet spot. That actually has an extraordinary track record of higher probability of substantial gains as opposed to swinging for the bleachers on a discovery. Anyway, that tends to take about 2 years.
Mm-hmm.
So if it's some guys building a mine without a proper feasibility study and fly by night, maybe I don't want to get in on that. But if it's people have done quality work, I know the team, and I believe this is going to be a mine, and it looks highly profitable, but it's going to take 2 years or 2.5 years. Well, I'm willing to get in early and wait, because the odds of success are high enough for me to be patient there.
Okay. Now, people subscribe to your service, and there's different kinds of people. Well, actually, let's do it this way. Could you give me like a profile of what a subscriber would look like? Somebody that pays for your service, and I know you've got sort of like 3 different levels. So people that are listening could go, oh, that could be me.
Well, the answer is somewhat bimodal here. It would have been just, no offense, but my average reader back in my Casey research days would have been somebody who looks just like you. Silver hair, has some knowledge and experience in the field. They're interested in metals and mining. They usually come to you already with the idea they're gold bugs, or they're big on copper because they see the electrification trend or something like that. So they already have this idea, and what they want is help picking stocks. Right? They don't have that experience, or maybe they've been burned before, and so they want someone they can trust to help them pick stocks. So that's been the mainstay for a long time. And what I actually find quite encouraging, though, is that there's a new class of speculator out there. They're very young. Many of them are, if not crypto millionaires, successful crypto speculators who got the speculator bug. And they're not religious about Bitcoin taking over the world in the end or what. They just want to make money. And they made a bunch of money, in crypto land. And so now they're looking around and saying, well, what else can I speculate on? And in that environment, you've got gold making all-time highs. Well, Bitcoin is struggling not to lose ground. Of course, anybody rational in that space that isn't religious about their favorite investment, if the goal is to make money, you're going to look around for a trend that looks investable. And so I just find this very encouraging, because I remember when I started in this business, people were so happy to see someone with black hair. When I go into these conferences in Vancouver or Toronto, there would be a sea of either silver hair or no hair, right? And now this is changing. I find this very encouraging, and people are realizing, the whole critical minerals thing has people understanding that mining is not evil. Properly done, respectful, well done mining that adheres to world-class standards is a necessary thing that literally props up our civilization above the Stone Age level. And if you want windmills or solar panels, you got to have mining, right? So people are getting that, and young people are now interested not just in speculating in what I do, but even becoming mine geologists. Because they get it. They understand that responsible mining is necessary for our civilization, and even for the popular goals that most young people adhere to these days.
I love that. That's great. What did you say that again? Responsible mining is essential to what was your phrase?
Well, I don't remember exactly what I said, but you got it. Well, responsible mining is not just nice or a business that's profitable. Responsible mining is essential to a civilization above the Stone Age level.
What a perfect line to wrap up on. Listen, folks, I'm so happy to have Lobo on the show with us here today, and just a great freewheeling conversation about the mining business. His website is independentspeculator.com. Go check it out and see what you find there. He mentioned that one article he has there, "Are Gold Stocks Broken?" That's free access on his website to that. You might find that interesting, and you can find out more about what he does. But I hope, Lobo, that our conversation here has got some people interested in taking a look at how they can be investing in a bull market in gold, other than just buying a bar of gold. So thank you kindly.
Yeah, thank you.